please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
IT is not doing well in today's trading session. In fact, Hexaware is down more than 10%. Rima, what are brokerages saying?
Well, it's 9 days up and 1 day down for mid-cap IT. That's been the extent of rally. But that seems to be the principal concern. One, the run-up has been too much. Secondly, on account of that, the valuations are very high and therefore there is no room for disappointment. So Kotak has downgraded the stock to a sell from a reduced rating. It's a 23% rally in the last 3 months. They're surprised that the guidance has not been changed on revenues from the current 10 to 12% given the Q1 beat, but that they say the management could be conservative. And the stock is expensive at 21 times calendar year 19 PE. Nomura also retains a reduced rating. They expect a combination of these factors, the run-up in the price, lack of a guidance upgrade, moderation in the company's margins, full valuations, all these factors will put pressure on the stock. Morgan Stanley also continues to maintain an underweight rating on Hexaware. They're saying that the stock is already pricing in a potential upside risk. The risk reward is unfavorable, and given valuations are at 20 times PE, there is very little room for disappointment. And this time, there was some disappointment in the form of margins and the fact that the management did not up their revenue guidance.
All right, Rima, thanks so much for that. Well, beaten down stocks like HCC that are down nearly around 20% for this week. They've recovered in trade on high volumes. Here's word coming in from the management on their Q4 earnings, as well as plans to reduce debt.
Our debt is reduced to about 3,270.
Okay, and you said that you expect significant...
Of which about 1,400 crores is working capital.
Right.
So that's not a debt.
Right.
So that leaves us with about 2,300 crores or so that we have to pay back.
How do you see that reducing in the coming financial year?
Because I have to get money from government, I hesitate to give. But we should be able to reduce it.
To what point, if you could?
I would like to bring it down to zero, but let's say over the next 18 months or so, we should be able to clear this debt. 2 or 3 big investors have shown interest in wanting to invest with Lavasa.
Right.
And we are now under discussion to find a resolution.
As far as getting into the nitty-gritties of this audit report is concerned, one point which they've said is that the liabilities of the Lavasa subsidiary exceed the assets by over 2,300 crore. Well, that's a substantial amount, sir.
No, I'm sorry. I don't entirely agree with that issue. But the simple reason, the valuation of Lavata land that you own is anybody's conjecture.
Right.
If you go by the ready reckoner that charges the stamp duty, then this does not hold true.
Right. My question here is slightly different. My question is, if in any situation the debt recast plan does not materialize, let's assume it, then in that case would filing for bankruptcy be the only option or the option which you would consider for Lavasa?
I don't know who will file for. We are not going to file for bankruptcy.
Okay.